Hey everyone. In this video, I'm going to walk you through our framework for thinking through tax strategy. We're going to cover how to think about tax and accounting for CEOs. These are important principles that should be the guiding light in working through finances of the business. We'll talk about the big no-nos. These are critical rules in your business that you do not want to trip up on. We've learned them from big audits. We'll talk about strategic planning. Any strategy you think about or implement should move you closer to a bigger, better version of the business you have now. And whether that means goals for your team or goals for your business, all of our planning is only valuable if it moves you towards your target. So without further ado, let's jump right into it.
Hello, everyone, and thank you for joining the Strategic Advising webinar. We're going to be talking about how over the past decade, technological and social change has dramatically changed the way that we work. However, it has not changed the way most tax and accounting firms work. Most of us have had to evolve, yet tax and accounting firms lag behind. So we'll be talking about what we've learned as advisors in the digital marketing and e-commerce space. And this includes how we think you should be leveraging your service providers in the financial space strategically. Today's agenda is pretty simple. We'll share a little bit about who we are as a firm. We'll talk about the strategic approach that we talk so much about, and we'll discuss how we work with our clients. At the end, we'll leave a question slide up, allow folks to get their questions in, and go from there. First off, just to tell you a little bit about who we are, we pride ourselves on being a strategic tax and accounting firm. We are generally ex-Big Four, looking to provide that same high-level strategy to digital marketing, e-commerce, and technology companies of all sizes. We are very keen on making sure that our clients get that one-on-one feel. I know from experience at the Big Four that typically you get a big-time partner to sell the work, and then you get some 24-year-old senior associate to do the work. And I used to be that 24-year-old senior associate, no longer am, but I know exactly the frustrations that come out of that. So we do guarantee our clients one-on-one attention with a managing director or partner at our firm. A little bit about our team. You can see we've got Dave here, who is a ex-Big Four and ex-CFO. I'm sitting here in the middle. Interesting fact about my experience with the big firms, I was able to travel to most tax havens across the world, which has been an interesting set of stories to say the least. You learn that there are countries you've never heard of, like Malta and Jordan, but that's neither here nor there. And then we have Ashton, who's on the team and an ex-digital marketer. So he brings experience from a big agency, and together we form a pretty good team. We're at about 11 now. We've been growing in size and looking forward to do more of that in order to serve our clients. This here is just a little brag slide so you know kind of where we sit. We are very active in defending controversy. That means that we are defending audits of all sizes. We've handled an audit as large as $600,000 and did that up successfully. We also acquired a smaller company called Shared Economy Tax in 2018, which is focused on real estate and Airbnb and the sharing economy. So we've built out a practice that's highly focused on real estate, which is usually helpful for our clients who have real estate holdings. We average $30,000 in R&D credits, so we're very experienced in finding strategies for our clients that are very helpful in their specific situation. I'm not going to go through everything else, but you can get a sense of who we are, how long we've been around on this slide, and a sense of who our team is and where our focus is. When we talk about what we do, it's very important that we make a divide in how accountants work. It's very important for clients anytime we go through services or problems that we understand that there are really three pillars of working with an advisor that's split up between strategy, implementation of that strategy, and then compliance. And I usually ask, where do you spend most of your time? And 9 times out of 10, people will say compliance. I just need to file my tax return. I need to file my sales tax. I need to make sure that I don't get in trouble with the IRS. And that's a very fair point. However, while compliance is the most necessary and most common place to spend time, It's usually the most low value. And that's why we always talk about the strategic approach. And you can go through these. Generally, the more strategy you do before compliance, the more strategic compliance is available to you. And you can see here that we divide that between tax and accounting. But again, generally, we're encouraging our client base to increase their strategy within their compliance in order to get the most bang for their buck on any kinds of services in tax and finance. And here we just talk about the way that we work with our clients. And typically, this is a slide that we want our fast-growing CEOs to look at. Usually, there is an increasing scale of need based on how fast the business is growing. So I'll just give you an example that if you're handling your day-to-day operations and you're looking at simply having a few questions answered in a tax return, we usually say a consulting relationship really makes sense. You just need some touch and go, maybe quarterly consults, but maybe your bookkeeping and accounting and the way that you're handling the business is taken care of. So in those cases, we say consulting makes sense. However, for fast-growing businesses that have an array of needs, growing teams, payroll, we usually expect to see some level of a CFO. Oftentimes, CEOs will fill this role, but it's important to know where along this continuum your needs are and what resources you already have available. We often work directly as our clients get bigger with a VP of finance or a VP of tax or directly with the CFO. But just important to understand that fast-growing companies are going to need more than just bookkeeping and tax as the problems get more complex. The strategic approach. So here I want to be very clear that what we're talking about is not just checking the box. So today we always ask our clients, what is the problem? Most clients tell us that checking the box is not enough. When we get to tax time and look at a return, oftentimes the question is, why didn't you tell me this sooner? To counter that, we've worked one-on-one with our clients throughout the year on making sure that we have tools and strategies before the ink dries on your books. Usually what we're talking about here is my ability to change your tax bill after December 31. The tools in my toolbox are going to be far fewer. So our big drive home point is it's super important to get strategy throughout the year and update that strategy as time goes on, so that when it does come to tax time, there's no question about what you're leaving on the table. How do we break down strategy? So we typically look at strategy within three veins. The first is entity and entity structuring. This applies whether you're a one-man band or one lady band, or if you are a team of 100. Oftentimes, there's questions around entity structuring that involve deciding between entity types, S Corp, C Corp. We'll talk a little bit about that in the future. Usually makes sense for companies at all levels to ask, have I optimized my entity structure? Second, we talk about finance and accounting strategy. This ranges from bookkeeping all the way to audited financial statements and beyond, into making sure that you have a set of books that has meaning for management. And what I mean by that is often there are key performance indicators, KPIs that can be tracked month over month that are very meaningful in terms of the health of the business or related to a specific strategy or goal that a CEO or management team has. Lastly, and usually most obvious to our clients, is tax and financial planning strategy. There's a whole host of things that we can do throughout the year, whether it's one-on-one with the business owner, if we're talking about how to structure financing, how to structure expenses, how to fund a retirement plan. There is a litany of things you can do around tax and financial planning, all the way through to an R&D credit, that have very meaningful results for the business throughout the year. So really three main veins that we use when we're considering tax strategy. Here we are talking about entity considerations, which I've touched on slightly, and there are questions every business owner should ask whether they have an entity or not. If they have a single entity, there should be a question of, should I have a multi-entity? Multi-entity structures allow for different tax treatments based on where the numbers flow in one entity versus the other. We also talk a lot about switching the entity type. We've seen over the last few years a large trend to the C corporation, as the C corporation has a tax rate of 21%. This can often make sense for taxpayers in very high income tax brackets where you're going to get hit at 35%. Well, instead of getting hit at that 35, 37%, based on a few assumptions of the business, based on tax projections, we can actually show at what level of income and reinvestment a C corporation is going to generate less tax. Another big driver is that in an S corporation, if you're constantly keeping cash in the bank in a profitable year, as a flow-through entity, you're going to be taxed on all that income. So a C corporation allows you to not take a hit on all that income that you don't pull out. You're still taxed at 21%, but not personally. So in that example right there, where you would have been taxed at, say, a 37% rate, you were just taxed at 21, and all the cash sitting in the bank can be reinvested, untaxed, and count as deductions in future years. So very important distinction that we've seen as we've moved into a new tax regime following the tax reform that went into effect in 2018. I mentioned a few of the financial and accounting strategies that we talk about, but these are really supposed to be customized to the goals of the business and the needs of the management team and owner. What we're really looking at is, number one, what are you tracking? When you pull up your profit and loss statement, what do your eyes get drawn to immediately? Is it payroll spend? Is it revenue? We want to educate our clients to make sure they've got a holistic view on what makes for what we call a money strong business. This can often be reflected in the dashboards of QuickBooks or Xero. We really want to make accounting a simple thing that our business owners check in either once a day, once a week. We leave that to discussion around the specific needs of the business and sometimes the personality profile of our clients as well. We have clients that want to check on this hourly and want to talk a lot. We have clients that just want to make sure that there's a certain level of income in the bank. That gets customized and strategized around so that you have the most automated solution. And finally, we talk about tax and financial planning. This has to do with a lot of pass-through owners who, at the end of the day, what their business makes is not as important as what it means on their personal return. Meaning, if the business makes $100,000, well, that's great, but it's not as meaningful as understanding how it hits a joint return. Say that your spouse is a high earner as well. That $100,000 is going to be treated very differently for you as a married partner versus maybe a partner who is single and has a lot of deductions or a lot of loss businesses. So we're often talking about, let's look at what the business makes in the pass-through context, and let's understand what the tax strategies become after we draw a baseline. It's so important that we always start with a tax projection, that we always do it with our on-ramp and retainer clients. What we want to basically say is, look, if the ink dried on your books today, this is what your tax bill would be. And by the way, here are a list of options that you can enact to change that tax bill. And sometimes it means that there's a deduction strategy. Okay, maybe we'll move some expenses into the right place to claim the best deductions. Sometimes it is planning to make an estimated tax payment. Sometimes the decision a client makes is, all right, just tell me what check I need to write and when. There are a longer list of tax strategy implementation scenarios that I won't get into for the purpose of this call, but just understand how you finance debt, how you fund your 401k plan, and if you're looking to sell the business one day, how you're structured now is really going to impact your potential exit. So these are all things that we want to start thinking about with our clients. And under an engagement, we're making sure that we have definite milestones that we're going to cover. So we're always looking to understand what our clients are telling us, sometimes what they're not telling us. And what we always hear is we want somebody that is going to bring ideas to the table. We don't want something bad to happen to find our strategies. We want to know these things proactively. That's number one. And number two is we don't want to have to mail in paperwork. We don't want to have to go through the inefficient processes of paperwork or back and forth communication to get things done. So the other key thing that we bring to the table beyond strategy is technology. We want to deliver our recommendations. We want to review the information provided in the most seamless way. So those are the two things that we really focus on in our engagements and relationships is number one, the strategic approach, and number two, delivering information and receiving it in the most seamless and secure way. So in that vein, we're going to talk really quickly about how we work with our clients. And we want you to be able to take this and leverage this information in your own relationships. And whether that's working with us or working with your current advisor, we want you to be able to compare and say, hey, this is really good that you guys are doing. We're going to bring this into our own workflow. If you have a VP of finance or if you're a CFO, we want to basically inspire seamless relationships. Our ongoing and customer-driven approach entails three main things. Quarterly meetings is the cornerstone of our relationship. Things change quarter to quarter. I can't tell you how many times I've had clients who've been completely dead set on going one way. Perhaps it was an entity structure. I had a client wanted to be an S Corp in quarter one. The business made a major investment in quarter two such that the profits weren't there. It no longer made sense. We've had clients really turn on a dime because businesses can turn on a dime. So how do you get through that is with an ongoing relationship. We are very keen on making sure that every client has a dedicated project manager. And then lastly, oftentimes a lot of advice gets lost in communication. Sometimes there are multiple interpretations of the same call. We provide our clients with strategic documentation every quarter. That means that if we provide you a list of strategies, most of them will be on paper. If we come up with an Excel model that projects out the benefits of a C corporation, we're going to hand that over to you. So strategic documentation is a central part of how we educate and advise our clients. We also want to demonstrate that we're very reliant on having a centralized place to exchange information. We have a client login that allows our clients to provide their information requests. Here it is an example of what gets provided during an engagement. We're going to have a roadmap that basically shows what we need to deliver by when, who owns the task, and when it was actually completed. So we're very focused on having an accountable system where, yes, we're being held accountable, but also our clients know when things are in their court. We need certain information, which is displayed here to get going. Generally, our information requests are pretty simple. They show up in a centralized information request dashboard, which you can see here, highlights what needs to be completed. And then we have a secure way to upload all the information into our portal. And if you're ever worried that any information will fall by the wayside or any requests will go unanswered, we have a system that is going to remind you periodically that we need information. So we're super focused on providing the most technology-friendly way to make sure our clients get their data. And the next thing we want to show is how we typically look at tax projections. So we want to make sure that the big no-nos are not looking at your tax bill until the end of the year, right? The big no-nos are not having reconciled books. So what we do is during that time period, we'll pull from your QuickBooks or Xero your current financials, and we'll actually compare our projections against what actually was filed last year. So what you're seeing here on this screen on the left-hand side is a federal income projection of what was earned, right? So you see revenue up there. We didn't show in the screenshot all the expenses, but you can imagine these go on all the way down to operating income. We take those numbers, we show them against the prior year to make sure they make sense, and we walk through them with our clients. What are the major changes? Here's a major difference that we noticed this year that wasn't there last year. The reverse will be true. Once we have all that, we put that into a tax calculator. And that's what you're seeing on the right-hand side. You're seeing, okay, we have operating income of this amount. And in this case, it is about $41,000. And now we have add backs and subtractions. From a tax perspective, not all the numbers in your QuickBooks are going to be recognizable from a tax perspective. For example, loan payments. We all know that anything put on a credit card or use of loans are deducted if you're on a cash basis when the money's spent, not when the loan is repaid. So sometimes there are those adjustments that create a gap between what's on the books and what's on the tax return. We call those book to tax adjustments. The take-home point here is you need to get very clear on your reconciled books to date, making sure that everything that needs to be there is there. And then 2, being able to taxify, being able to put those numbers through a tax calculator and understanding the adjustments. Sometimes there is a conversation around what's on the books versus what's on the tax return. And that's something we think should happen on a quarterly basis. And again, just wrapping this up here, at the end of the day, what you're concerned about is what does this mean on my my tax return. We calculate that out. You can see here, this is an Excel model that shows how this would be reflected on your personal tax return. And again, we're looking at what the difference is between this year and last year. These are numbers that have been slightly modified from a client, but the trend is actually accurate. We had generally the same amount of revenue year over year, and what we didn't have was any tax in the prior year because there was a giant loss. So the giant loss, you can see the revenue and expenses aren't shown, but on business income 1, you'll see what the K1 reflected. And last year, that number was very negative. There were lots of investments. There was lots of funds that were taken on through financing to cover the business. And there was a huge loss that resulted in this client paying 0 tax. Well, guess what happened this year? This year, good news, was very successful. And there currently on the books is profit of $427,000. And that's great, but it's not great if the client doesn't anticipate the 6-figure tax bill that comes with that. So this would be an example of a tax projection that starts the conversation of what available strategies there are. So again, just leveraging what to do best. You want to look at your numbers before the ink dries. You want to look at what your tax bill would be if you did nothing else. And then you want to use that as your springboard to identify tax strategies. So maybe, and this is something we recommend to clients, if you can quickly calculate your net income, maybe that's the beginning of the conversation with a tax advisor. And what a tax advisor can do is they can take that number and begin to list out, based on your situation, what tax strategies are available to you. That covers our strategic approach webinar. We want all of our clients and anyone we come into contact with to be thinking about looking at their tax bill, improving their tax bill, and eventually being happy with their tax bill. It sounds like an oxymoron, but it's not. We look forward to connecting. If you have questions, you can contact us always at info@mytaxact.com, and you can visit our URL and connect with us there as well, mytaxact.com/connect. I look forward to chatting. Thank you.